Welcome to the Art of Making Home, where we unveil the secrets of the home building industry from a contractor's point of view with Sandro Stefanucci of Abstract Homes.
Hello, beautiful people. It's Sandro Stefanucci from Abstract Homes and Renovations. So glad you can join us today on our podcast. On today's episode, we're going to be talking about navigating construction financing. And with us, we have a pro, Alisa Aragon from Bridgestone Financing, and she is a mortgage broker and a very good friend of ours. So we've known Alisa for quite a while now, and we just, we're thinking about these episodes and what we talk about. And I don't really think, by the way, sorry, Alisa, welcome to the show.
Thank you, Sandro. Thank you for having me.
You're welcome. It's great to have you here. So maybe we can just start off. What is a mortgage broker, and how does it differ from, say, if you're obviously we're doing financing here, how does it differ from a traditional lending institution and stuff like that? So if somebody's looking for a mortgage, or even thinking, like we have like a multiplex that we're looking at, or somebody wants to build something and they don't know how about getting the financing. Can you just unpack that for us?
Sure. Absolutely. So the difference between the bank and a mortgage broker like myself is that the bank only has their only options. We have multiple options. So we can, with one application and one credit report, we can go to multiple lenders, such as banks. We work with kind of like Scotia, TD, HSBC, as well as with monolenders. So those lenders only work with brokers. They're all backed and they're federally regulated as well as the banks.
Right.
Most of them are actually backed by banks. They just don't have the huge penalties. We work with credit unions as well, and we also work with some subprime lenders and private lenders as well. So there's a lot of options that we provide instead of just one option with the bank.
Right. That's great. So I guess one of the first questions I would have, does it cost me more to use a mortgage broker?
No, actually, our services are complementary in the way that we get paid by the lender based on the mortgage amount, not the interest rate. So that really helps a lot. And as well, there is some instances where we're not able to do it with, say, the AAA lenders, for example, the banks and credit unions.
Right.
If there's sometimes that lenders do charge a fee, and in cases we do have to charge a fee because otherwise we don't get paid. However, we do disclose that to the client right off the bat. It's not all of a sudden you have a surprise, right?
Right. So it's a little bit more, I see it as more like a personalized, a kindlier, friendlier approach to financing, if you will.
Yeah, for me, I really focus on the relationship with the client. The financing just happens, but it's really about them being comfortable, and it's really about my relationship with them. It's not about the financing.
Yeah, that's a good point, right? Like, I don't think you get that with the big banks, for the most part. I don't know. We dealt with banks years ago, and I never really had the warm fuzzies dealing with the banks. So, dealing with the mortgage broker definitely is more appealing to me anyway. So, for a person of the podcast is like, maybe break down the construction financing and how does it differ from, say, a standard mortgage?
Construction financing is very, very unique, just because there's quite a lot of moving parts to it. The interesting thing that you actually mentioned too is banks do construction financing as well. However, one of the banks actually has pulled it from the branches. So you can't just walk into it. They actually will refer you to somebody specifically to talk about construction financing just because of its complicity. Like I said, there's a lot of moving parts to it. And even there's a lot of mortgage brokers that actually don't do construction financing because, again, there's a lot moving parts to it. And it's really important that whoever they're working with, they actually know what they're talking about. So construction financing is really a short-term loan that is given to a client to build a home, whether it's building a home for themselves or doing a rental or a spec home. And it's just a short period of time. This type of loan is actually one of the riskiest loans for any lender. And the reason is because essentially is if there's a house and you're going to tear it down and build something new, they're in the business of lending. They're not in the business of building. So if for some reason they have to foreclose the client, then what they do is they actually have to hire somebody to finish the house and then sell it. It's not that it just, if you own a property and then you foreclose on it, well, essentially you just the bank hires a realtor and then they sell it and it's kind of done. So there's a lot more risk to the lender for it. And that's why they're a lot more cautious of how they lend money and everything else.
So what would you say, what would be the advantage of using a mortgage broker as opposed to a traditional lender when you're doing construction financing?
So the reason too is because, as I mentioned before, I do work with multiple lenders. So again, I will actually find different options for the client and see what kind of makes sense. Because there's different banks that have different policies, lending policies, and criteria for construction loans.
Right.
So it's really, I mean, essentially a client can go and do that, but I mean, it is a lot of work to be going to different lenders and doing that. Also, then pulling their credit, which actually will affect your credit if your credit is pulled multiple times. So again, the advantage to me is I actually know the different lenders that are available, and sometimes with construction financing, it's almost like what's the flavor of the month, because sometimes if they have overexposure, they might actually really pull back on lending in certain areas where others might not. So it really kind of changes a lot. You did ask what's the difference between a construction financing and regular financing. Like I said, construction financing is a short-term loan that is used during the construction period. Once the house is complete, it's 100% complete, an occupancy permit has been issued. At that point, that loan gets paid out, that construction loan, and then it's turned on into a long-term loan, such as, you could do, I don't know, like a 5-year term or a 4-year term, whatever you decide to do. But then at that point, it is a long-term loan. As well, during the construction process, depending on the lender, most times you just pay prime plus 1 on the advance funds. So as they advance you the funds, they actually you just pay interest on that money. While with the standard mortgage, obviously you're paying principal plus interest.
Right. So you're paying prime plus 1 typically is a going rate for a construction financing?
That would be for a traditional lender, yes, like a bank and credit union.
So like, what would you need, say, now we need, 20, 30% down payment if we're going to buy a house. So if you were to do construction finance and you wanted to build your own home, what would you need up front?
Essentially, the lender will lend you up to 75. Now it's loan to value, or the future value of the home is the loan to cost. So how much is going to cost to complete the house? So most lenders will lend you up to 75% of it. Max might be 80, depending on it. However, it doesn't mean they will actually release all the funds right off the bat. Like with a traditional mortgage, if you buy a home and your mortgage is $500,000, they will lend you the full $500,000. With construction loans, they're actually based on draws. So depending as you progress throughout the construction of the mortgage, that's how they will advance the funds. So it is recommended the clients do have a little bit more of it, especially because there will come a point in time where, as you know, with construction costs now and everything else and suppliers, sometimes they're actually needing deposits a lot larger than before, especially when you get into passive homes and stuff like that, where I had a client, he actually ended up ordering windows from Germany. But he had to fork out the money at front to get the windows, but the lender's not going to give you that money until that product or that installation has been completed in the home, because it's based on them progressing as the home is completed.
As it's completed, then the money is advanced, right?
Yeah, so there's usually about 4 stages. Usually the first one's the land draw, and that draw is actually very, very critical. And the reason is because they might lend up to 65% of the loan to value. So this is particularly important because we find out right now here in Vancouver, a lot of people have tons of equities. They have their home is paid out, or they have a very small mortgage, and they're like, I want to stay in place, I want to build a new home, or I want to do a major renovation. But they have, like I said, it's free clear title. So at that point, the first draw is definitely critical, because the lender will want you to spend your own money before they advance any money. So the first usually land draw is up to 65% of the land value. And again, if you won't need all of it, I would suggest you take all of it and just put it in a bank or in your bank account so you actually have access to that money. The next stage is usually framing. When framing is complete, the next one is lockup. At lockup, essentially, is when the house is completely locked up, the windows, doors are all in. Then you get to the finishing, when they're starting doing all the finishing of the home, and then completion. So essentially, what the house is complete.
Right. So people, obviously, most people aren't as experienced and know all the ins and outs of that. So if you put it in layman's terms, just say somebody has a property, and just say, the rules have changed now in BC where you can put multiplexes on a single family lot, right? And, you have family members that all want to live maybe on the same lot. Now they can. You can stratify it, and you can do those things. Just maybe in easy steps. What would they first want to do?
Well, if they don't own the land, obviously they'll have to look for a parcel of land that is going to be suitable for the building of what they're wanting to do. At this point, it would also make sense to engage a builder like yourself to pretty well say, okay, what can you actually build in this parcel of land? And definitely look at the financing, because so essentially what they would do is do a little bit of research, see if it makes sense. Then they can put an offer, and it could be subject to financing. But again, there's quite a bit of logistics to it as well, because it depends if there's going to be an existing house at that point, because as you know, permits are taking a lot longer than anticipated or that we would like it to be.
Right.
So then construction financing really. The way the lender will give you construction financing is once pretty well they have floor plans, and then essentially in order to be able to get a construction loan approved, we need the lender will require floor plans, a budget, a contract from a builder,
right,
and elevations, pretty well front elevations.
Right. So before you start that, so what if there was no house on the land, and you're just buying that piece of property with the intentions of building something like that on there? So just the land value. What does the lender look at land value wise? So again, what's the percentage that you would need to put down just to buy the land?
If it's just the land only and there's no house and the house is not livable, most lenders might go up to 65 to 50% loan to value.
Yeah, so that's
a lot of money.
Substantial,
yeah. And now if there's a house and, for example, it can be rented while they go through the construction process, essentially at that point it would just be you can just get a regular mortgage for it and rent it in the meantime. Or sometimes that happens. I do have a client, they're actually looking at building a duplex. So what they're going to do is sell their existing home and then look for a property that they like, and they're going to be living in the home while they actually go through the process of getting the permit and the signing and everything else. Once the designing is done and they have, like I said, the plans, they have the budget, the contract with the builder, and front elevations, at that point, then we would go for construction financing, because the lenders will get an appraisal done of what it would actually be the cost to complete the house based on the budgets that they provide.
Right.
And that's what they will do at that time. And then they will approve the loan based on that. They will not fund or provide the first draw until pretty well the construction budget is on.
Mm-hmm.
The building permit has been issued.
Right. In that, so it is quite a process. So and where are you in all this stuff? Walking the customer. Are you walking the customer through this, a client through the whole process?
Oh, absolutely, yes. And that's where I'm different as well. I'm not like, okay, well, here, thank you so much, I got you financing, and disappear. I kind of joke with my clients because I said, you don't get rid of me that I sleep, and I mean that in a good way.
Yeah.
Because I'm there with them, whether it's just a regular mortgage or a construction mortgage. With the construction mortgage, I'm with them throughout the whole construction. Even though they can call the lender, I'm actually the one they call me. I work with them to get the draws, and I kind of coordinate all that with them. And I'm there with them side by side through the full construction process.
Right. So in my mind, it's essential that the customer does have that. To me, it's actually better if the customer does have either some kind of institution that's doing a construction mortgage, and I know the money's there.
Mm-hmm.
I think that's great, and they have that. So we've done that many times before, and I think it's a great way of going and securing that construction cost, because by the time you get going on your the permits, and by the time you actually get a permit and you start building, the prices have changed by then too. So it's always good to have a builder that knows what he's doing to get on.
Oh, and that's critical. Like, you guys do amazing work, and you're fantastic at what you do. And that's what I tell clients. Like, don't look at the dollars and cents. Look at who's going to be building at home, because this is a long-term relationship. It's not going to be like you guys are going to be together for about a year or so, or longer. And you're going to be working side by side. And it is important that you're comfortable who you're working with. And that's critical. Like I said, don't just look at the dollars and cents, because who are you going to be dealing with? Are you going to be dealing with the owner directly, the builder directly? Or are you going to be having project managers? Like, who are you going to be who's going to be looking after you, right? So it is important that relationship's there and the client feels comfortable who they're working with.
Yeah, that's great. A lot of good information there. And so if we just kind of condense that, what would you, say would be the key considerations for anybody looking at doing financing in that respect? That like maybe three key takeaways that.
One would definitely pick the right builder like yourself. That's definitely key. I would say another thing is make sure you have a very good contract with the builder. Just because we're hearing, unfortunately, of horror stories that just some builders don't have the right contracts, because then they give this deposits and then they don't end up getting the work done. For the financing side, it's really working with somebody that understands the construction financing and that is going to be with you the whole way. Unfortunately, there's so much turnover sometimes at the banks that you even see it with your banking, and so you need to work with somebody that I guess I would recommend that you work with somebody that kind of is going to be there with you through the whole process and help you out. And you are going to have some capital requirements further than just the 25 or 35%, because like I said, there's going to be a point in time where keep capital is going to be required.
Right.
And if you don't have that money, you're not going to be able to pay the builder and continue on in the process, right?
Right. So you do consulting. I would think that you would obviously engage with a client before, and just explain the rules and see, do you have enough money to do what you need to do to get to that point? So there's some really good tidbits in here.
One thing that I would say is it's interesting because a lot of clients say is like, oh, I have a line of credit. I'll just use the line of credit, tear down the house, and then just build something. And that's actually a breach of their loan agreement. And the lender can actually demand the loan because essentially the security is the house. And if they're tearing down the house, that security's gone.
Right.
So lenders do sometimes get information like that, and they could demand loans. So I highly recommend it's not the way to go.
Right.
I know some people are like, well, I'll just use the line of credit. However, it's not the right way to do it. And it can be a huge risk, especially because trying to get another lender, which I have done, midway through construction can be very challenging. And especially banks will not touch mid-construction loans. It's very risky for them, right? It's like,
Right.
Why would they take the loan from somebody else?
That's good.
Risk.
Good info. That's great info. Well, that's great, Alisa. Thank you so much for being on the show and unpacking this mystery, as it can be sometimes with financing. If people want to get a hold of you, where would they go?
They can definitely go to my website at financingpros.ca, or they can email me at alisa@financingpros, or give me a call.
Yeah. That's great. So we'll put that on the we'll tag it on the podcast here. Thanks everyone for listening again, and please share this podcast. Leave us reviews for the podcast. We really want to know if you guys are enjoying these shows and you're finding them useful. Thanks again. Take care.
Thank you for listening to another episode of The Art of Making Home with Sandra Stefanucci from Abstract Homes. Listen to the podcast on all your favorite players as well as here on YouTube.